No matter how you feel about it, Tesla's stock has done very well since the company went public in 2010. Its shares have gone up by more than 20,000%, easily beating the market as a whole and regularly beating Wall Street's predictions. Early investors have become millionaires as a result. Tesla is now worth more than Toyota and Ford combined, making it the most valuable car company in the world. In today's movie, we'll talk about how ARK Invest, a company worth billions of dollars, thinks that one share of Tesla will reach $22,000. What does this mean for the stock price of Tesla? What does this mean for customers and people who might want to invest? We should find out. Investors and experts have reason to believe that Tesla's production capacity will grow a lot in the next 5 years, when new factories open in Berlin, Germany, and Austin, Texas. Many people think that the market for Tesla cars will keep going up, especially in China, where the company that makes electric cars has already done very well. Tesla also benefits from the general excitement about electric vehicle stocks. As countries around the world tighten emissions rules, it becomes clearer that zero-emission and low-emission cars will be the norm in the auto industry in the future. It has strengthened its position as the biggest player in the EV market and is likely to grow a lot in the near future. Today, we're going to talk about the ARK Invest team and the new price goals they've set. ARK's investment team recently posted what they thought Tesla's stock could rise to based on their study. At the time, they thought that in 5 years, each share of the company could be sold for $4,000. So let's look at what the ARK Invest goal means before we get into the details. Analysts on Wall Street usually give their price markets for a stock based on what they think will happen in the next 12 months. But when it comes to Tesla, many experts have been completely wrong for the last few years. Most experts have had a hard time just predicting what will happen in a given Tesla quarter. In their defense, it would be hard to predict what most companies will do even 3 months from now, given what has happened recently and the COVID-19 outbreak. Analysts will have a harder time figuring out what will happen with Tesla because things like extra sales and other things could change their predictions. In a 3-month quarter, a lot could happen. Now think about trying to guess for a year. That is 4 quarters. The only benefit is that you don't have to worry about small changes that could change the estimate for a quarter. So a year can be a pretty good time to make estimates, and you can get feedback at the end of the year on what they said would happen. ARK Invest focuses its research on innovative businesses and uses a 5-year time frame. This is pretty cool because it shows you how investment companies predict the future years in advance, which is hard for investors to do with these huge estimates. The positive prediction for ARK Invest over the next 5 years is a hopping $15,000 per share, while the bearish prediction is $1,500 per share. But their projected value of $7,000 per share is just a weighted average, not a price goal. ARK Invest gives each of their price goals a certain percentage chance of happening, and based on that, they have come up with an expected value of $7,000. They show this in a chart. Some of the dots are purple. These purple dots show where they think their goals will be in different situations, and we will talk about all of that. So relax and get set. It is not possible for the predicted value to be $7,000. ARK Invest's price goals are right if ARK Invest is right. These are the most important things for Tesla to think about if they want to grow quickly, and this is how they set their price goals. The first is their gross margins, which have been growing quickly at Tesla and are now about 21% in their car business. The low cost of the plant in Shanghai and the high cost of the Model Y, even though making the Model Y costs the same as making the Model 3. We are excited about Tesla's gross earnings because of these two things. Tesla's gross margins have grown quickly because of these two main reasons. Even more impressive is that the Model Y and the Shanghai plant are connected, and that Shanghai will be Tesla's These things should raise Tesla's earnings to between 20% and 30%, if not more. The goal for the short term is 25%, which is a low estimate for ARK's growth margin input, because the company thinks the high will be 40%. The fact that Tesla is making more car types and batteries could also help its gross margins rise. As output of batteries and cars goes up, prices could go down by a lot. The second is how well cash is used. it is a lot like gross profits. If it costs Tesla $1 billion to build a plant, that amount goes into a balance sheet and goes down as time goes on. Every quarter, Tesla would have to pay for depreciation, which would cut its income by a certain amount. ARK Invest's table shows that each car costs $16,000, which shows up as an expense over time and lowers Tesla's high gross margins. They think each unit will cost $11,000. ARK Invest says that the top end is about the same as the potential of the Shanghai Gigafactory in China. We think that as the companies learn more, it will get cheaper to build them. Every time you build one, you get better at it. Autonomous capacity is the third part of the ARX model. ARK thinks there is a 70% chance that Tesla won't be able to make a fully self-driving car, and a 30% chance that they will be able to do so within this 30%. They think that Tesla would charge $2.50 per mile at first, but that price would go down to $1 per mile. Musk said Tesla cars would be fully self-driving by 2020, but it's already 2022. Even though Tesla's self-driving has already been improved in a lot of ways, it's still not fully self-driving, and it's still not clear when it will be. But that doesn't change ARK Invest's high expectations because Tesla has the most advanced self-driving technology and more information about it than anyone else right now, and orders are coming in every day. They are on track to be the first ones there. Now, how could Tesla reach that $22,000 per share mark? ARK Invest needs these things to work. We've talked about gross margins, the ability to run on its own, and how well capital is used. Their price goals are based on a mix of the probabilities of each of these factors. If you look at the table from ARK Invest, you'll see that the price of $7,000 isn't even there. But based on the total of all the price goals, it has gotten. But that isn't one of their results. ARK Invest gives each price goal scenario a pretty cool name. For the case where Tesla goes out of business, which has a 1% chance of happening, it is called the Black Swan by ARK Invest. The fight bus is another interesting thing that could happen. Tesla can't get any of the key elements from any of the sources. It can't build factories well, get its self-driving network up and running, or cut costs, but it can hit its price goal of $1,000. At least there are Wright's Law after 5 years. ARK's version of Wright's Law can help Tesla cut costs, but they can't build plants well or start an autonomous network and still meet the $2,500 price goal in the Golden Goose. A 12% chance of something happening. So Tesla can do everything, right? In this case, they can cut costs, build factories more quickly, and start their autonomous network. The price goal for each share is $22,000. ARK Invest has made claims. To be honest, we came up with that number by looking at the chances of 10 different things, including bankruptcy. So said Wood, whose company controls about $11 billion in assets. We've tried to be as fair and unbiased as possible. The company also thinks that if Tesla doesn't go bankrupt, it will be able to keep going. They think that Tesla will sell stock worth $10 billion to boost production. But this is not likely because the odds are leaning towards the situation where Tesla hits the Golden Goose. ARK Invest also thinks that Tesla will issue additional debt worth tens of billions of dollars in some cases to increase production. The amount issued will depend on how profitable the company is and will be backed by fixed assets. Based on this chance matrix, our bear case says that Tesla will only sell 3.2 million cars in 2024, which is about half of what it is selling now. Our bull case is based on the idea that Tesla's 18% market share will stay the same and that a big part of its fleet will bring in high-margin robotaxi platform fees. Do you think Tesla will be able to hit the Golden Goose? Leave a comment.